Welcome to Gold Silver Pros.
Hey everybody, it's Rob Kientz with 𝙂𝙊𝙇𝘍𝙀. We're recording this on November 21st, 2022, and it will air this week on the channel as basically a Thanksgiving week special for those of you here in the United States supporting that and celebrating that this week. And the returning guest is Kirian Van Hest, who goes by Deso on Twitch and on his website. Kirian, how are you?
I'm doing well. How are you?
I'm doing very well. Honestly, Kirian, it's been too long since you've been on, and that's been my fault, because we went through a big transition in the business over the summer, and I was kind of putting out some fires and didn't have the normal guests I had on. But I'm glad now that all of that is in the past and I can get my regular guests back on. They've all been calling me and emailing me. And so we get an update on the cryptos. And the reason I bring you on in this space is because honestly, I think you understand it better than anybody. And anybody who wants to understand this, all they really need to do is follow your Twitter feed. But let's get an explanation. Let's walk through what's happened. A lot, like you said before the show, a lot has happened in the last couple of weeks. We've got FTX. We've got some concerns with Tether. Let's just start with FTX, where, give us the lowdown on that. What happened there in your eyes, and what does it mean?
So it's been quite a busy 2 weeks. I announced the break on my stream, and then everything started to collapse. Even though I was saying a week before that things were horribly boring and Bitcoin just went sideways and was asking for something to happen. So I got what I wanted. So the main story, obviously, is FTX, which is quoted as the second largest exchange behind Binance, or it used to be. I question that because we don't actually know how many real users they had. But regardless, by the establishment or by people in general, the average crypto person, if you will, FTX was seen as the legitimate one, the one that got promoted in the mainstream, the one that was, talked about by people you would say you would trust. Well, pumpers and such, but regardless, there have always been problems with FTX below the surface. The critic sphere on Twitter has been well aware of FTX basically being a scam or a fraud because too many things just haven't lined up over the years.
Before you go on, sorry, real quick, I want to get in the details, but let's just say there are a lot of people who are just trying to figure out FTX. Even if you had bought Bitcoin or Ethereum, you may not understand exchanges and FTX. So real quick, just 30 seconds, can we just explain what FTX is, and then I'll shut up and let you continue.
Sure. I've been so deep in this space, I forget who I'm talking to at times. So an exchange is basically a place where you trade crypto, a centralized place to trade crypto. Even though you don't really need it for Bitcoin, you can send Bitcoin directly from one wallet to another. But a centralized place to exchange it when everybody congregates gives better prices and better price action and such. But the problem is that we'd have no insight to the exchange's books. Basically, imagine if you have a broker where you own stocks and such, that they were not or barely audited. You didn't know the balance sheet. They didn't want to say the balance sheet. They didn't want to say which banks they banked with. They didn't want to give any information on the largest customers. Didn't want all the things you know about traditional finance don't exist. Obviously, that was going to go wrong, so it went wrong. And the problem with FTX being such a large exchange and seen as a legitimate one, and Sam Bankman-Fried, the guy running it, was one of the largest political donators to the Democrats, on top of everything else. So if you've seen puff pieces about him in the mainstream media, that'd be why. But he's a total scammer, total fraud. His hedge funds, Alameda Research, it's basically just a Ponzi scheme, really. So what happened, how it went down, is they have an exchange token. And they're not the only one that have this, by the way, but they have an exchange token called FTT, or FTX token. And it turned out, thanks to reporting by CoinDesk, that what Alameda Research, so the same hedge fund of the same company, had on their balance sheet as quote unquote assets was mainly just this FTT token, as well as a bunch of other tokens. Now, at the time, the fully diluted market cap, so all the tokens in existence, was much larger than the circulating market cap, meaning the tokens actually traded back and forth. Because if that dead money, that uncirculating money, if it went into the circulating supply, then obviously the dollar price is going to drop. You have much more supply at the same demand, so the dollar price drops. If that were to happen, the assets on that balance sheet, which is mainly the token, also precipitously drop with it. And then you have a problem. So after it became known that of the 10 billion, about 5 billion was this one token, 𝙂𝙊𝙇𝙑, which his name, I can't remember his full name, but the CEO of Binance, who also still owned, or Binance still owned, 500 million worth of these tokens, suddenly found this out, and he decided to dump all his tokens, or at least announced that he was dumping his tokens. So that's sketchy. The whole thing from back to forth is sketchy. So you're going to hear a lot of sketchy stuff today. Just roll with it. We do as well on Twitter.
Okay.
So he announced that he was going to sell 500 million of these tokens into a very illiquid market, which made everybody who owned this token sell, obviously, which made Alameda's research balance sheet drop like a brick, which made them seek emergency liquidity, which obviously confirmed that their balance sheet was illiquid as fuck. So that just spiraled out of control. It ended up with the bankruptcy, where the guy leading the bankruptcy, or leading the company through bankruptcy now, Sam Bankman-Fried is gone. He's called John J. Ray III, and he's the same guy who went through the aftermath of the Enron bankruptcy, or the Enron scandal. He handled that. And he's the guy who said, in all of his entire experience and career, he had never seen a company with such bad financial controls as this one. So this is officially a bigger fraud than Enron, and it's going to do much more damage because there's none of these funds are regainable. They've got such a large hole in the balance sheet. They've been dipping into customer funds. That's a big no-no. All of that is gone. They have a very obscure company structure with many shell companies. 134 of those companies have filed for bankruptcy. They lied up until the end. They said that FTX the US version of the exchange wasn't affected, and it was declared bankruptcy. A lot of high-profile celebrities got caught up in it, most notably 𝙎𝙊𝙇𝙑 and Tom Brady, who were like spokespeople and big investors into FTX. They lost it all. And obviously, anybody and everybody who had any sort of funds stuck on FTX is most likely looking at cents on the dollar in capital that can still be recovered. And a lot of those funds were from trading firms as well. So that's where we get into Contagion. And you're going to hear about Contagion and other firms going bankrupt over this for months to come. This is so much bigger than Luna or 3AC was. So, because you've been out of the loop for a while, in May, we had the Luna crash. So Terra Luna, which was an algorithmic stablecoin, which turned out to have no value whatsoever. That had a combined market cap of 60 billion. It went to zero. After that, because a lot of people had their money in this thing called Anchor, which was part of the Luna scheme, a hedge fund called Three Arrows Capital, which had their money there, went bust. That was another big event. So if you look at the Tether market cap, for instance, you can see two big market cap decreases in May and early June, which is the Luna event, and then the Three Arrows Capital event immediately following. After that, it bottomed and the market cap started increasing again. Now, the last 3 months of printing went away within a week. So we're back to another one of those kind of events. We had another official depeg. The peg crashed to 93 cents of the dollar on Kraken, almost as big as the 92 cents during Luna. And now Contagion hasn't even hit, but still has to come. So one of the things of Contagion that's hitting is, for instance, Genesis. And Genesis is a lending platform, custody platform, a whole bunch of things, part of the digital currency group, which is basically the largest lender within the space. They're such a large lender that you can consider them a prime broker. Genesis is their I think, lending section platform. It's not part of the custody. They say the custody assets are safe and everything, but at the same time, they refuse to publish the cold wallet addresses on chain. Coinbase has said that the Grayscale Bitcoin trust Bitcoins are safe with their custody, but they too refuse to indicate where they are. So we have no on-chain data as far as where Grayscale Bitcoin addresses are. We're trying to track it. And I saw a post that claimed to have found about half of their supply. But God, if you just look at the tree of connected addresses there, they have to be so many tiny wallets. It's going to take a while to figure out. So some reserve with Ponzi schemes, then it's never a case of there's absolutely no money left. Even with FTX, there's about $500 million left after a hack. And before the hack, there was $1 billion left. But Ponzi schemes just have a hole. They just have a balance sheet, which they claim they have. And if you actually look at it, what it's actually worth, it's not worth that. It's worth less. Worth something, but less. So with the Genesis trading, they've been desperately looking for an emergency $1 billion liquidity injection, which if you hear those words, you already know they're not going to get it. If anybody needs $1 billion worth of emergency liquidity, that's throwing good money after bad. So rumors so far have been that they're not getting any money from anybody. So it's likely the Genesis is screwed too. And that might lead to the Grayscale Bitcoin Fund unwinding. Now, the Grayscale Bitcoin Fund is the quote-unquote legitimate way to buy Bitcoin because it's listed on, I think, the New York Stock Exchange. And you could just buy it like any ETF shares or stock. So it's very TradeFi. Now, the reason why it was allowed instead of ETFs, which have been constantly rejected, is because Grayscale is a closed-end fund, same as PSLV. So this channel will have experience with that. You throw Bitcoin in, but you can't get it out anymore. The whole thing trades at a premium. If it goes up enough, they can buy more Bitcoin, or trades at the discount because, if there's not enough demand, the discount drops. Last I checked, it was trading at a 46% discount. Imagine PSLV trading at half the price of silver. That's what we're talking about here.
And by the way, when that happens, if PSLV were to trade half the price of silver, it would completely disconnect SLV. I'm sorry. It would completely disconnect SLV from the silver market. People would look at it and say, "What? That's not supposed to happen." So obviously, something's going on in relation to trade and inventories, right? Inventories and trade, they don't match when something like that happens. When you've got something that should be pegged to a price, like these stable coins pegged to $1, it should be $1. With maybe some exceptions along the way that have legitimate reasons, but it shouldn't deviate too far from it.
Fluctuations are fine, but we're not talking about a fluctuation. We're talking about straight line down here for the Bitcoin fund. And it's something that they can very easily, very quickly correct by just publishing the reserve addresses that line up to what they say they have. Same as with Tether. They could just publish an audit and all of us will shut up. They could have done this at any point in the last few years, but they haven't. And I think now we go to a couple of my tweets that have done very well the past week. So for people who wanted to see me back on the channel, my Twitter has been doing well in the last 2 weeks. I'm now past 10,000 followers. Yay. So
congratulations on that, by the way.
thank you very much. It's been a long road, but people are finally starting to listen a little bit more. So let me share my screen. Let's do this one. Yes, sure. Come on. We'll go here. No. This one. So somebody else called Edwin Dorsey already did some research about a year ago on it, but I either liked and retweeted. Twitter doesn't hold those for a year, and forgot about it, or I just happened to miss it in the craziness of last year. So just shout out to him. But otherwise, Grayscale on the 19th posted a message saying that they have everything and it's on Coinbase, but for security reasons, we will not make such on-chain wallet information and confirmation publicly available through cryptographic proof of reserves, yada, yada, yada. The disappointment to some, but panic sparked by others is not a good enough reason to circumvent complex security arrangements that have kept their investors' assets safe for years. Well, I'm sorry to say, but obscurity is not security. So in this case, since their investors are losing the money rapidly because the price is crashing, it's safer to prove that you have it. And you can always, with stuff like crypto tumblers that exist, you can't tell me. The Digital Currency Group bought in 2020 something called Vault, V-O-1-L, or V-O-1-T, I mean. That is the premier way to custody Bitcoin or any sort of crypto. It's stored in cold servers, cold wallets, in military-grade bunkers in England, World War II bunkers. So why they don't custody their Bitcoin with them, I don't know. But it should not be a problem. The ledger's public anyway. If we ever find out those addresses, and like I said, we've already tracked about half of them. We don't know whose client is whose from Grayscale's. So in that sense, it doesn't compromise their investors. It's just really weird that they come up with this. So then you start looking for discrepancies, because of course you do. And in their annual report, which they just filed because they're just a stock exchange listed company, it basically says stuff like shareholders will if the trust is dissoluted. So if Grayscale basically delists themselves, just like ETFs can delist themselves, they will sell the underlying and shareholders will receive a distribution in US dollars or Bitcoin, incidental rights, and or incidental virtual currency at the sole discretion of the sponsor. Now, that already sends my red flags up, because it could just say US dollars or Bitcoin, but there's a comma there. So incidental rights stands on its own, which I had to look up. It's fucking legal jargon, but it basically sounds like an IOU to me. Like you have the rights to dollars or the rights to currency, but that's not currency. That's the rights. That's an IOU. So while just caveat here, I'm not a lawyer, not at all. So that sends up a red flag, but it's not enough. However, as you are a former auditor, I've got something funny for you. I want to see your reaction on this.
Okay.
So, that, listed companies like this are audited, and the audits themselves are technically audited too by the audit committee. And you would think that the audit committee is as independent as can be. So if you look at who actually is part of their audit committee, it's the, I think this stands for Messieurs or something like that, but it's Silbert, Sonneheim, and McGee. So here you have Barry E. Silbert, chairman of the board, Michael Sonneheim, board member and chief executive officer, and Edward McGee, chief financial officer. Now, as a former
to stop you right there, audit committees in publicly traded U.S. companies are typically at the board level, and a lot of them, they don't always have like the CFO and CEO on that board because of independence. So a lot of times the independent directors of that board, like somebody independent of a financial reporting function in the company, would be the overseer of the audit committee on the board, so that there would be a lack of conflict of interest. Like, you don't want your CFO, you know, who does financial reporting, also to be the leader of the audit board who'd be auditing his own practice. So yeah, I immediately red flags pop up. You got your CEO and your CFO on the audit committee. That's a problem.
Not just that, the sponsor was the chief executive officer of the sponsor until 2021. So he was previous CEO,
right? And
he's the founder and chief executive officer of the Digital Currency Group. So the parent company.
Okay.
So
yeah, not a problem there at all.
So I obviously compared that to Apple, because I know Apple has got his duck in his row, and it's a $2.5 trillion company. And you can see here that their audit committees are just listed on the website. They've got no other ties to the company whatsoever. They don't have any CFO, CTOs, or three-letter occupations within the company. Of course, they have different companies that they might also be part of. But as far as Apple is concerned, they have no ties to Apple. They just make sure the audits are okay. That's what an audit.
Can I throw something in here too?
Yes.
I think SBF, there was an interview with an independent agency in him, and they were, I think, even tweeting back and forth and private messaging and texting back and forth. And SBF, Sam, the CEO, was asked about audits, and he said, yes, audits would help, but you got to do them differently than you do everywhere else. And to me, I don't think they want a true audit of a lot of this stuff, because the audit teams would have found a bunch of this shit right off the bat.
We on Twitter could find this shit.
As though these entities don't need audit. Everybody needs an audit group. You have to have one.
Not just that, but this is Grayscale we're talking about. This is an exchange-listed fund. These guys fall under the purview of the SEC. And I went as far as to just look it up in the law, because Apple actually lists the section of the law that is applicable. And you can see here that under the required standards, independence, they clearly say that here they must be independent. Independence requirements for non-investment company or investment company issuers. I suppose that it's the bottom one for Grayscale. In order to be considered independent for purposes of this paragraph, member audit committee, list issuer investment committee may not, other than in his or capacity as member of the audit committee, the board of directors, or any of the board committee, yada yada. They can't accept money. They can't accept fees. They can't even accept retirement plans. They
can't be an interested person of the issuer, meaning they can't have a direct financial relationship, is what that means.
Yeah, they literally have to be independent. So Grayscale is, by their own admission, clearly in violation of the Exchange Act, which is just an SEC lawsuit away at this point.
Yep.
I could just submit this to the SEC right today. But I'm not going to do that, because the SEC is slow as fuck, and I'm not going to do their job for them. Fuck them. If I can find this stuff, they can find this stuff. And it's their job. So, and this is an exchange-listed fund. This is not FTX. This is not some offshore exchange either. This is just, this falls within their purview. And they do nothing. So fuck them. And they're just going to embarrass them as long as it takes for them to move. Now, to continue onwards, let's see, because I've got multiple tweets open here. This is just Grayscale. I haven't seen anything about them declaring bankruptcy yet, but it could very well be by the time this video goes live, that's already happened. Maybe to a few others as well. So at least we were talking about it. So moving on, I'll just close these two. We go to another exchange, because this tweet actually did very well. This was picked up by Reddit and some media outlets, so it got a heck of a lot more likes than you see here. Yet I wasn't credited. during the whole back and forth of FTX exploding, 𝙎𝙊𝙇𝙑 from Binance started tweeting a little bit more. And he also said that he was going to involve himself more politically while he usually stayed out of it. Basically, the whole scam's collapsing. And now he's trying to use bravado to divert attention away from himself. But in this time, it backfired, because it always does. So what he said was literally, if an exchange have to move large amounts of crypto before or after they demonstrate their wallet addresses, it's a clear sign of problems. Stay away, stay safe. All right? I'm very well willing to accept that. However, very close to this tweet, just before that, Binance published a list of reserve wallets, which they claim also was incomplete after the fact. But what's the point of proof of reserves if it isn't complete? It's a very convenient excuse. So working together with a website called Nansen, which shows these wallets on the chain and everything, Binance attested to their reserves and everything. And within 24 hours, they moved 2.75 billion tethers from their cold wallet 2 on Tron to another wallet that was not listed of reserves. And I waited for a while to see if it would update. No, it did not. So he literally said, don't trust exchanges that do what I have just done. This is the kind of shit that Sam Bankman-Fried was also saying for years. Like, Sam Bankman-Fried literally said in an interview like 6 months ago that some exchanges are already secretly insolvent. And I suppose he was talking about himself. Now, I have on-chain data for this, obviously, but that's a different tweet. So I'm going to go into the next tweet, which refers to that one, where this mystery wallet, where they first moved 2.75 billion to, it moved more funds later. And this leads into Tether, because I am now dead sure this is one of the ways in which Tether / Binance / Justin Sun from Tron, which is the chain Tether is running on for half of it, they're all working together in conspiracy. And this is one of the ways they pump up the Bitcoin price. They temporarily take tethers out of cold storage, which are not circulating as part of the market supply. They add it to the market. They put trades on Binance with it or against it. That moves markets. They gain money from that. And then they store the money back into the cold wallet out of circulation with a little bit more money in it. And thanks to supply and demand, that holds the peg. Because just with FTT token, if you have a bunch of tethers in one place that can just move, jump into the markets and move back, then what's the real value of the thing? You know, supply and demand is based on circulating supply, and these cold wallets aren't circulating. But if they then jump into circulation and jump back before, you know, the whole thing can be arbitraged to other exchanges, it's just manipulation. So to show the screenshot itself, this is Tether on the Tron block explorer. The biggest wallets. This is the red flag number 1. Okay. Of the tethers on Tron, Binance, well, when they attested, now they've moved it a little bit, but when they attested, they had, let me see, 14.2 billion, if I got that right, in tethers, just in these two wallets. Now, Tether is issued on the Ethereum chain and on the Tron chain, and historically speaking, they kept this sort of in check, like both chains were equal sized. However, after the whole Luna depeg and everything got, hairy, all the prints that have happened afterwards have been on the Tron chain. And now Tron is 5 billion bigger than the Ethereum chain. Meanwhile, if you go look at the Ethereum chain, Binance, its biggest wallet there, is about 700 million there-ish. So doing some addition that I remember, at some point, Binance had about $4 billion worth of Ethereum tethers, which currently is like less than 3 billion Ethereum tethers. But they have something like 17 billion of Tron tethers, which is really, it's incredibly lopsided. You can just see it on your screen here. So on Ethereum, Binance is about as big as, it's smaller actually than OKEx, which is like the next second biggest exchange. So anyway, just to talk you through what you're seeing on screen here. This mystery wallet is where the 2.7 billion moved into from Binance Cold 2. That dropped it to 3 billion flat. Now, when the screenshot was made, 10 hours and 24 minutes before it, 500 million tethers had moved from the mystery wallet into the Binance hot wallet. And that Binance hot wallet basically works like a crypto tumbler, meaning there are so many transactions happening so rapidly inside that one wallet that it's impossible to track where what money came from. So even if it's $500 million, it doesn't matter because you put $500 million in, a second later, you see a transaction of, say, $5,000. How do you know that that $5,000 wasn't one part of this stuff you just put in or wasn't already in there?
So are you basically saying it's like a money laundering operation where a bunch of money comes in, a bunch of transactions go out, and it's hard to figure out, where that money went to, essentially?
Yes. Have you heard of Tornado Cash?
No.
No. Well, Tornado Cash was a decentralized laundering machine where everybody would just put their Ethereum into it. And if you would just wait a certain amount of time, other people would withdraw other Ethereum from it, and you would simply not be able to tell how much, what Ethereum lined up with what. Because if all the money is in one wallet, the only way you've got to track anything flowing in and out of that wallet is to go by amounts, because it's all fungible. So you got a pile of, let's say, $10 million. You throw $2 million in there, you take 500,000 out. How do you know that the 500,000 wasn't already in there, wasn't part of the 10 million that people previously put in there? So that's how these Binance wallets effectively work. Now, with exchange hot wallets, there's no other way. It just works this way. However, it just turns out that it's impossible to track transactions in it because on Ethereum, you can get 5,000 entries exported into an Excel sheet. And for Binance Ethereum, that gets you about 6 to 8 hours worth of transactions. And God only knows what transactions you're looking for there. So the reason I'm able to track things a little bit better, and we'll get to the last tweet I got to open here soon, is because, well, Bitfinex is a smaller exchange, so there's less activity. Things can be tracked better. But and the Tether treasury wallets work a little bit differently, of course. These cold wallets have very few transactions too. You can see that this cold wallet too has only 741 transactions total. It's manageable. You can find stuff in there. A lot of that is shit coins and shit transactions, like these tiny little transactions. So it's still manageable. But all these hot wallets, especially Binance Hot, because it's so incredibly big and active, any money that's put in there, you can't track it. You just can't. However, if you go by amounts, you can still make sense of it. And that's what I did with this screenshot, is because they put $500 million into the hot wallet from this mystery wallet at 10 hours, 24 minutes ago. And the cold wallet had an inflow of $500 million plus 68 million in change. 10 hours and 7 minutes ago, so 17 minutes after the first transaction, it's very reasonable to assume that the original 500 500 is the same as this 500 million. Because why else would it be 500
Right.
Who's the mad lab trader that pulls 500 million tethers out of storage, puts it in the market, gets a trade, and then puts it back into cold storage where he can just leave it for months? It's illogical human behavior. Nobody does this. So as a result, nobody has done it. So what then is this transaction that clearly did happen? It has to be shenanigans. It has to be exchange itself. If it's not a random trader, then it has to be somebody else who has the keys. And who has the keys to the Binance cold wallets? Binance. So it's the key to all of this is simply to question their internal accounting. That's all you need to do to understand this. They claim that these Binance cold wallets hold the tethers of traders on their platform. And I would assume that what they then trade with is internal accounting, their internal database, and to just settle it on the back end. But that's all assumptions. We don't know this. We've never seen Binance's accounting. Binance has made a point of skipping, basically changing countries and avoiding regulators as much as they could. I even looked it up on Wikipedia. Binance Wikipedia. Because all of this is easy to find. People just don't want to believe it. Legal status. Well, they got banned in a few countries. Where is it? I'm moving out of China. I'll find Malta. Here. Binance announced its intention to open office in Malta after strict regulation in Japan and China. They signed a memorandum of understanding with Bermuda. You really trust finance companies that go to Malta or Bermuda. Binance Jersey, another tax haven. No, it doesn't say anymore. They changed this page since the last time I checked. But they, at some point, it said that they claim to be under the regulations of Malta, but the Maltese government then said, no, they're not. They're not under our regulators. We've never heard of them. To this very day, we don't know where the headquarters of Binance is.
We don't know the origins of Binance, who runs it, what jurisdiction of law.
We know who runs it, but we don't know what jurisdiction they run it under.
And
we have no idea.
If you don't know this jurisdiction, it's really hard to keep anybody accountable to any regulations because you don't know which regulations to hold them accountable to.
Indeed. I mean, if you want to sue them, you first have to serve them, but you don't know where to serve them. I mean, they have offices, of course, but as far as the headquarters go, we just don't know. I think it's Caymans.
Why do you suppose, Deso, that Binance offered to bail out FTX and then backed out? Because at one point they were saying, okay, we're going to help FTX out. Then they said, oh, it's beyond our ability to help.
Because I don't think 𝙎𝙄 from Binance understood how bad things really were.
Mm-hmm.
I think he just, to him, it might have been just a play to take over a competitor. But the moment he did due diligence, the moment he got a look at the books, he must have realized that they've been gambling customer funds.
Mm-hmm.
And if you've ever done anything in the markets, you know that touching customer funds to trade with, when you've explicitly said you wouldn't, is a huge no-no. Yeah. That is a felony. That is federal jail time immediately. If you take over an exchange which has done that, then you are liable. You'd be a fool to do it.
Mm-hmm.
So it wasn't just a case of a $10 billion hole in the budget. It was a case of customer funds that went missing. And the moment they found that out, it was likely, he must have said no. So I don't think this was all a conspiracy or a planned hit or anything. I think it was just 𝙎𝙊 taking advantage of the situation. This balance sheet was published, so he too got a look at what basically how much FTX was really worth. He found out that his main competitor was swimming naked. Don't forget that SBF has been trying in Washington to get regulations passed which heavily favor FTX and which would see Binance basically banned from the US. So he was really trying to take 𝙎𝙊 down too. And he was doing that while being, just a complete asshole. 𝙎𝙊 found out, he decided to kill him, just take out this competitor. And the moment he got to see the actual balance sheet and the actual stuff, the actual shit they pulled, maybe he realized that, oh God, I've gone a little bit too far. I mean, this is not his fault, clearly. Bankman is the fucking fraud. But he just bit off too much more than he could chew. Anyway, with the whole crisis and such, Tether dropped below peg, which means Tether can't print. And if Tether can't print, they have to find other ways of pumping up or gaining USD liquidity. It's all about dollar liquidity with a Ponzi. So you have a cash pile somewhere. You don't know how big it is. You do know that it's not the entire amount they promised that it is. You just don't know how big is the hole. And with FTX, it turned out that the entire thing was a black hole. With Tether, we don't know. It's very likely that most of it's a black hole, but we don't know. So anyway, just to add to what I just showed here, can I tie this action where $500 million moves into circulation and then back out of circulation to any sort of market action? Yes, I can, because this is when the first transaction happened. Now, to be fair, the second transaction happened about here. So this big spike up.
What transaction? Be specific.
Oh, the first one, the $500 million one,
right
here. After that one happened, that's where the line here is.
Bitcoin moved up.
Yes. So by this spike, the $500 million should already be back into the cold wallet, but it's so close. And that money might have bought something else, which cycled through the markets. There's many paths that this could have taken with just 17 minutes. It's too close. It's too close to a direct, straight line up for me to say this has to be completely unrelated. It's just coincidence. I don't think it is. Especially not because I know that Tether is below peg. And with all the scrutiny, I don't think USDC will want to cover for it. Because in the past, when Tether couldn't print, the USDC market cap decreased. Could be that Tether just has USDC on the balance sheet and they just were exchanging it out. Could very well be. But God, I don't trust any of the stables. I've seen problems with all of them. So, but the USDC market cap isn't going down. Which, BUSD isn't helping either, which just leaves one option. They have to sell Bitcoin to gain dollars. They have to extract more dollar liquidity from the ecosystem, and it's better to do that at a higher price. So they run up the price and they sell the strength. So that's why you see vertical. Well, in the past, you see this like a vertical spike up and then a vertical spike down. This is them pumping and dumping the price, literally. But this is just pumping it and then selling it down. It has to be. It makes no other sense for this kind of action to happen here and for it to be legitimate, for this to actually be a legitimate trader who just decided to bet $500 million on Bitcoin just to get they still got like an 11% profit on that because, they gained 68 million. So, yeah, that's how I think they've been cheating the system in just one way. They've used multiple ways, but this is clearly one major way they've been doing it. This works exactly the same as QE does. Just literal Federal Reserve QE. When you think about the Federal Reserve's balance sheet and how they're taking bonds out of the market so that the supply is reduced, which increases the price, which drops the yield. This is the same thing. They're taking circulating tethers out of circulating supply, even though these wallets are counted as part of circulating supply on CoinMarketCap. They really aren't, because we just have their word for it that there's $10 to $14 billion worth of this trading in their internal accounting. No evidence of that actually happening. So this is basically just their account where they keep the QE money out of the market.
And it's a hidden account, so they can do whatever they want with that account and people won't know, right?
Well, obviously it's not hidden. We can easily find it, but very few people actually look at on-chain evidence, which is really weird because, verify, don't trust. That's how Bitcoin got started. But these days it's trust, don't verify. You can see clearly just the fact that Binance has got this many tethers on Tron, but not nearly as many tethers on Ethereum, should send up alarm red flags everywhere. And people have said, yeah, it's cheaper on Tron. I don't think that's a good enough explanation. I really don't.
So do you think FTX, Binance, Tether, Bitcoin are all tied together? Seems like we have different connection points, but we're kind of missing some pieces
conspiracy.
of the mystery.
It's a huge conspiracy. It's very likely. Well, I don't think that BUSD, which is Binance's own stablecoin, is unbacked. I think they actually got a large pile of cash lying around. But what I've suspected for a long time, even though we can't find evidence for this, is that the attestations that BUSD, USDC, and Tether have been putting out, that all of that uses the same pile of cash. And that is part of the reason why they've been able to make attestations, because they have to show the auditor company something. An attestation is not an audit, but for them to give assurances in a legal fashion, you still have to show them documents, and they will attest to those documents being legitimate, or at least being documents.
But it may be that cash pile backing a bunch of these. And so it's not just a Ponzi with one particular entity. It could be a Ponzi with multiple moving parts, is basically what you're saying. That's a different animal, Kirian, than a lone actor. Now you're talking about collusion between exchanges.
Oh, I would line all these assholes up for a RICO charge. Easy.
Yeah.
Easy. No doubt.
It's almost, I was going to say, it's almost mob-like in its complexity and its setup, how they would do it.
I am dead certain this could all fall under a RICO charge.
And 100% it could. 100%.
Just to give the final piece of evidence, this is the best screenshot I have to prove that it's all unbacked and may have been from the very beginning. So just to explain everything you see on the screen here. After the Luna collapse and after 3AC, the market cap bottomed out, went sideways for a while the peg recovered. Now, because the size of Tether has grown so big, you can see tiny little movements in the peg. People have said that, it's just fluctuations, it doesn't matter. But it does. So what I found out, and I wrote an article about this last August, which is about here in the beginning of the chart. And then you got this 26-day drought. And after that, it happened again. So I know I'm correct on this. So what are you seeing here? Every time the peg gets above $1.0002, Tether will print new, fresh, unbacked USDT into the market. They will sell it on the open market. So on Bitfinex, on Binance, on Coinbase, doesn't matter. They have an account there. They will just sell it into the market. And because you have more supply at the same demand, that drops the peg.
Yeah.
If it drops below 1.0002, for some reason, I don't know the reason behind it, but they cannot print below it. They just refuse to. So what I've done here is I went to coinmarketcap.com. You can do this yourself, but you need a paint program. Hang on. You go to coinmarketcap.com. You take the 3-month chart Well, it's a little bit more problematic now because you got a giant line down as well. But you take the 3-month chart, you take a screenshot of that, of the market cap and the price, make sure they're aligned about the same. You post them both into paint.net or Photoshop or wherever you've got layers. Select the market cap, you delete all the white parts so you can see the price below it, and you line up the dates. So you make sure that the timeline is correct. And then you will see that in the 24 hours, if within 24 hours, the peg went above 1.0002, then Tether will print within 24 hours. If the peg drops below 1.0002, they will either do a residual print or they won't print at all anymore.
So essentially, once that gets up a little bit, they know they have space to print more and bring it back down. So they're just playing, hey, it's a little bit above 1. It's a little bit above parity. We're going to print a little into that until it gets below parity. Then we're going to let it ride until it,
yes,
tries to crawl back to 1. And then when it gets over 1, we're going to do it again. So they're just printing, and that's where they're getting their dollar. They're printing more tethers to get bucks instead of saying, let's get investments in bucks and then print tether.
Yes. They've always claimed that they receive investments from investors, which they then turn into a USDT, and that's the printing you see. So when they print, the money is already received.
Right.
However,
this is fractional reserve system because essentially tethers become the debt. You issue the debt and you get money. But the problem is you got more tethers. So at some point that breaks down. That's what's going to happen with the fiat system.
Yes. So
they're just doing the same thing as what the central bank does with dollars.
Even worse. What people are saying is, what I've sometimes seen people say is that it shouldn't matter because they're printing tethers to selling into the market. So now they have dollars that are backing those tethers. But you don't know that those dollars have gone into any sort of quote unquote reserve. You have no insight into where the dollars they gained with these prints have gone. But what I can tell you is that this is so blatant. I have not been able to find this anytime before the May peg, the May depeg, or the Luna crash, or any of that, simply because it wasn't granular enough. I've seen other ways and they've manipulated the price, but now that for the last 3 months, things have been, quote unquote, so stable enough that you can just see it on the chart. If they go above this line, this green line here, they print every time for 3 months at random moments. It's completely impossible random people do this. So the only explanation for this, for them to not just print above 1.002, but they immediately do so. You can see so on the chart that every time it goes above it, they immediately print everything they can until the peg is below it. So that to me tells liquidity issues. That to me means that they don't have the liquidity anymore to pump up the Bitcoin price significantly so they can sell Bitcoin and gain money that way. The peg itself on Bitfinex, which we know is the same as Tether, has been looking very anemic.
You think Tether, the whole scheme of Tether was just to go out and get Bitcoin, accumulate Bitcoin by issuing Tether, creating some sort of liquidity?
No, it was a Ponzi from the start.
For a coin, and then actual exchange, the Tether coin, which is not really backed by what they say it's backed for other coins that had value. Is that essentially?
It's just a fucking Ponzi scheme.
Yeah.
There's really no kind of criminal mastermind behind this. People have just become enamored by scammers, by people with any sort of kind of charm, as well as the idea of we're all going to make it, we're all going to get rich. It's just fucking greed. So what they did is they saw a way to basically print money, print a token, convince people it was worth something, and then gain money from it. But due to expenses, they never had a fully backed reserve. They've already been convicted by the CFTC and the New York Attorney General. They are not allowed to do business in New York, even though I'm sure they do, because they found, the New York Attorney General and the CFTC, that Tether was not backed at all times. In fact, from the sample size that the CFTC found between 2016 and 2018, they were only fully backed 26% of the time. And that was when we were talking about millions, not 66 billion. So what are the chances, just with this screenshot on the fucking screen, that they're still legit?
Kind of
Zero.
explaining this out for a moment. Hexcoin, Richard, whatever his name is.
Oh yeah, we've had dealings with him.
Yeah, months ago into my Twitter feed and just randomly replying to something. I'm a gold channel. Why he came on my feed, I don't know. We were talking, I think, about Bitcoin. There had been something happened. He came into the channel, seemed very nice, but then he got very aggressive with us and started name calling, being very explicit, all that kind of stuff. He's being basically an internet bully. Didn't really bother me all that much. But I started looking into Hexcoin, and this guy formerly was a former email spammer and had been fined for that. And basically, he was not on the up and up. And if you looked at Hexcoin's documentation, they basically said, I will give him this. He basically said in the documentation, it's a scam. He said it's a scam. You may never get anything back for this.
They have a page on the what? I'll just pull this up.
Yeah.
Because we went through it. First of all, let me just say on camera that Richard Hart, I think his last name is the biggest fucking man-child on this planet, and he can go fuck himself. He's a weak-ass loser. He has nothing on me, and I will tear him the fuck down if he even tries to come at me. Yeah. Look at this. 38% returns a year. It's a fucking Ponzi. I already went over his pulse chain, which he calls the biggest airdrop in history. You know what he's fucking done? He's just copied Ethereum. He's literally copied Ethereum with all the tokens on it, and then he's giving these tokens away as some sort of it has value. It doesn't. It doesn't. The pulse chain is just literally a copy of Ethereum. It does nothing better. It's no different. And God, it's like if you just copy, it's like I copy Bitcoin, like the chain, and I fork it, and I start my own chain. I'm telling you, you know what? If you sign up for it now, I'll give you a bunch of Bitcoin, make you rich. It's not going to be the same Bitcoin.
No, without all the proof of work and all the stuff.
Yeah,
and what it does is a lot of these crypto scammers work against the crypto market. So you would think that a lot of people in the crypto space would hate these scammers and would turn on them, because what it does whenever one of these coins gets issued is it creates more fiat crypto. And when you have so much fiat crypto floating around, it's going to hurt the returns of the legitimate ones, because you're just going to have too much choice. And there's only so many dollars and, krona and stuff like that in the world. So
the Ponzi's are so easy, capable of making new money, while anything value has to actually work to create more value.
Right.
They take away all the attention. Like, who wouldn't want 38% returns a year?
Sure.
That's how these Ponzi's keep sustaining themselves. That's why new Ponzi's keep started, because if people see 38% returns a year, they want this. But I know it's a Ponzi. What I earlier said with the FTT token and being all the supply locked up and it went into market and the FTT token crashed, just because it's in the list. This is what happens when all of the supply suddenly hits market. Okay?
Boom.
Now, let's look at Hex. And just look up here. The market cap is what's actually circulating. That's $4.8 billion. But the fully diluted market cap, that's all the tokens in existence, is 17.6. That means about 75% of the supply is locked up. What do you think would happen if that hits market? Now, I will give Richard Hart this. He has come up with an ingenious way of sustaining the Ponzi scam. To get tokens on Pulse Chain, you've got to sacrifice Hex. You got to, quote unquote, throw it away. I don't know if he still controls the sacrifice contract, or at least, but that's how people have locked up Hex permanently, so that it can't, quote unquote, hit the supply, because it's all fucking in the one contract. It's been, quote unquote, sacrificed. And what you gained in return were these worthless tokens on a copy chain. So in effect, the Ponzi can't really collapse. It can go worthless, but nobody can unlock their stake because it's all stuck in the fucking Pulse chain.
All right. So to kind of sum up some of what we see on the crypto exchange, it's basically people coming out and saying, I want to be my own bank. I want to print my own money, and it has value because I say it does. And I've got a purple dinosaur on mine, and the next guy has a zebra, and the next guy has Teddy Ruxpin because it's whatever they want. But trust us, these currencies are good. And oh, by the way, we're all swapping currency in the background to keep each other supported while this goes on. And then that banking system collapses and people don't understand. This is early banking in the US put on a blockchain, essentially, is what it is. It's the same BS we saw in early banking, now just digital technology, and it's ooh and ah, and it's got bells and whistles, and people look at it and say, oh, this is new, this is better. But it's the same things that have always been done in finance, just encapsulated in a different package, basically.
Yeah.
It's nothing new under the sun, essentially.
It's more complexity to hide that nothing has changed. Like I said, Hex and Pulse chain is effectively an advanced Ponzi, because instead of having the Ponzi completely collapse to zero overnight, even though the price has gone down, this is not uncommon in the cryptosphere, believe it or not. It hasn't gone down because you can see that the fully diluted market cap is much larger than the market cap itself. That means the supply hasn't unlocked yet. And I say it's an advanced Ponzi because Richard Hart convinced people to throw away a lot of these excess supply into this permanently locked contract so that they can get an early start into his next Ponzi. So it's like a fucking Ponzi loyalty system, if you will. If you gained enough Ponzi coins from the last Ponzi, you can get a head start on the next Ponzi.
Yeah, and he wants to reward his old Ponzi holders, make sure he gets them in to get that next Ponzi going, because he needs those investors. And he needs to do it before Hex collapses. So he's going to get people in this new one before Hex is going to collapse, and he'll say, well, that was flawed, stay in this one. And then he's just going to, but eventually when Hex eventually collapses, all of his credibility will be lost.
No, he's such an arrogant fucking man-child that he'll tell everybody, oh, you should have sacrificed your Hex. You should have gone into Pulse Chain because Pulse Chain is much better. You should have just done it. It's your fault. You're the idiot.
At some point, I think the regular is going to step up and start cleaning up some of this stuff. But one thing that I always tell people when new investments come out, be careful and look at how they age, because it always takes time for the government and auditors to catch up with stuff. And right now it's the Wild West period in Wild West period in cryptos, where a lot of stuff that's going to go on, it's going to be a scandal. 10 years later, we're going to look back and say, oh God, this is Charles Ponzi to America all over again, just using tech. And eventually stuff will come about. But right now, if you're you're speculating with money you can never see again. And I've learned that the hard way with some Bitcoin. A lot of value in Bitcoin disappeared. So I learned that. I didn't have much, but I learned it the hard way. That being said, however, do you think there are any of these coins in the crypto space eventually that could have value? Do you think anything will come out of this?
No.
Why not?
None of the coins you know of. This is not... I know why you asked the question, and it's not exactly because of technology. It's also is there still anything worth investing in? And the answer to that is simply no. What needs to happen, and this is good for everyone that it does. I mean, everybody who is still in the cryptosphere is going to lose all his money. That's on you. We warned you time and time again. Take the L, learn from it. At least you still have something. A lot of people are going to hold this to zero. I can guarantee you that. What needs to happen after that is that all the Ponzi coins go away. Look at CoinMarketCap. There's 21,816 cryptos listed. Half of these don't have volume. More than half of these. All of that needs to go away. There can't be more than 200 to 300 crypto that have actual utility, because there's not that many problems that blockchain can fix. Now, something like my system does have value, and I am dying to see the day where all this goes away so that my system finally gets a chance. But as long as people think that Bitcoin is their savior, it's not going to get a chance. It's not that the information isn't out there. People don't want to listen. The market cap here from Hex, the fully diluted market cap, the numbers are clear. Okay, 75% is locked up. You can't argue with that. Yet people do. The law of supply and demand, is very simple. Yet they will argue supply and demand that the hex will go through the roof because everybody will buy it. And at the same time, they will say that the locked up supply will never unlock. Because,
all right. Well, we talked a lot about this. We've been going for over an hour.
Yeah.
Good video. Let's wrap it up just real quickly in a minute or two. All the stuff you talked about, what's the key takeaway for people? What do you end with?
Don't touch crypto. Not now, not for the next decade. Mm-hmm. Even if I manage to get my system up and running and it works very well, then still within the next decade, don't try to get rich off of it. Really don't. Just stay the fuck out, because there's going to be fluctuations. There's going to be competing systems. It's all very complex, and most average people aren't this complex. They just, even if you're smart, you don't have the time to look into this. I am dead tired from looking into this, and I live off Social Security. I've got all day. Okay? I got nothing better to do. And I'm still confused a lot of the time. So eventually crypto will figure out. I still believe there's a future for crypto. I really do, because blockchain does solve a problem. But the current sphere thinks that blockchain solves all problems that you can possibly think of. Like
it's
a third world
To
poverty.
solve every problem. Yeah.
Yeah. I don't even think this is very similar like the tulip bubble of old age. I think this is much closer to the Mississippi bubble, where the population of France forced John Law to print more shares of the Mississippi company when John Law actually stopped printing shares because it was getting out of control. They forced him. Just like people now are just, there's another rug and another hack and another shitcoin. It doesn't matter. It just keeps on going because the people want it. The people need it. It's pure greed. It's biblical. You know what the best comparison analogy for this is? The golden calf from Moses. Mm-hmm. Moses took a little bit too long compiling the commandments, so the people made a golden Bitcoin to worship. Mm-hmm. It's just not worth anything.
Yep. All right. Thank you, Des, very much for joining the program. We'll have you back on and appreciate you explaining all of this for us. If people want to find you, how do they go about doing that?
Very simple. You can find me on Twitter at Deso Games. You can find my Substack, desogames.substack.com, although I don't write very often. I'm very tired now. And then in the coming short-term future, I'm going to be very focused on launching my own company. It's not going to be anything to do with finance. Don't worry about it. So activity is a bit low. But otherwise, also on Twitch, you can find me, twitch.tv/Deso Games, where I stream twice a week. Currently, it's game streams, but in like a week or two, we're going to go back to finance anyway. And I'll keep everybody up to date on the biggest events within crypto as far as you can see. I really need to disconnect from my feed for a little while, and I can guarantee you're not going to miss a lot, because this is contagion. Good old-fashioned contagion. This is going to make crypto suffer for at least 6 months.
All right. Thank you, Deso. We appreciate it very much.
My pleasure. See you next time.